Hey guys, Brock here with SST. This is going to be our first mini video lesson, and this video lesson I'm going to try to keep it under 5 minutes, hopefully less than that. Just a quick spurt of information I'm just going to throw out to you guys every now and then when I get it. I don't have to bring together this entire video lesson together. This will just be quick information. So let's go ahead and get started here. Our checklist for today is going to include me using TD Ameritrade and how I use TD Ameritrade to set limit orders, market orders, and stop limit orders. So the first one, a limit order. A limit order indicates the highest price you are willing to pay for security or the lowest price you are willing to accept to sell security. Your order will be executed at your designated price or better. This helps protect your order from sudden volatility, but it also means you will only buy or sell the security if it reaches the price you're seeking. So you have to set you set your price at exactly what you're willing to buy or sell the stock at. It's not going to sell it at a price different than that, and it's not going to buy it at a price different than that. Let me just go and show you an example here. So if you log on to your TD Ameritrade account and you go over to you highlight over the trade section here, you're going to click on order status. And what the order status does is it brings you up a window, and there are no orders here for me right now, but after you set an order, this is where it should pop up, and it will tell you if it's filled or not. If it's filled, that means that your order successfully went through. If it's pending, that means that TD Ameritrade is still trying to get your orders through, whether it be a buy or sell. So moving down here, let's just say, let's put in our winner here, DGRI, which went up over 50% today. So coming down here, our action here is either we're going to buy or sell. So we have buy highlighted. Quantity, let's just say I want to buy 80,000 shares. And we're going to click stock here. And our order limit will be, our order type will be a limit order at a price of 0008. At 0008 right there. So let's just say the bid was 888 and the ask was 999 and the last was at 999. So it's selling at 999. But you don't want to pay 999. You only want to pay 888. So you would set your limit order as 888. After that, you're going to click review order, and it's going to bring you up to a different page in which it's just going to confirm that this is what you want to do. And then you're going to click submit order. Now after you submit that order, under trade and order status, this page right here, it's going to tell you how many shares have been executed, and you can usually get them all executed at the same price, but sometimes, depending on if the stock's jumping up or crashing down, it's going to vary. So and I mean, it's even going to vary on a limit order. I mean, it's supposed to just buy you in at that exact price, but sometimes it differs. I mean, just slightly, but it'll differ sometimes depending on the kind of stock, especially like a triple penny stock here, like this one. So moving on, a market order. A market order indicates you want the immediate execution of an order for a stated number of shares at the next available price without any other restrictions. This means your order will seek execution once it's received by market, as long as the security is trading. A good thing to keep in mind with market order is, let's just say you see a lot of buy power go through, and you want to help urge the price of that stock up. So you're going to go ahead and buy in at a market order. That way, the first seller that's coming in, you're going to go ahead and buy him out and hopefully drive the price of the stock up. Now, if you sell at a market order, that's going to initially drive the price of the stock down. So let me just go and give you an example how to do this. Coming right here, let's just say DGRI again, 80,000 shares we're going to buy. And where we're going to buy at right here, you're going to click on order type and you're going to click market. And then after you click market, you just click review order and submit. And after you go to trade and order status, and it brings up this page right here, you should instantly been able to buy in. Now if you want to sell, it should have instantly sold you out, and it'll tell you that specific price right here under order status. So the last one I want to hurry up and go over here is stop limit. A stop limit allows you to enter two prices an activation or stop price as well as a limit price. The activation and limit prices can be the same, or you can choose a different limit price. A stop limit order becomes a limit order once the activation price has been reached or surpassed. Stop limit orders are accepted on stocks as well as most options. When choosing stop limit, buyers must enter an activation price above the ask price, and sellers must enter an activation price below the current bid price. So coming in here again, let's just say this action, let's just say this is supposed to be a sell here. So it doesn't say buy, let's just say it says sell. You want to sell this stock at 006. I'm sorry, that's 0006 as a stop loss, so that if the stock starts plummeting out of nowhere, you want to go and sell out at 0006. You don't want to wait until to see if it can go any further down or maybe a bounce up. You just want to go and sell out. And what you want to do here is you want to set your activation price a little bit higher than the price that you want to actually execute it at right here. So activation price is at 0007. So once it hits 0007, it's going to activate my limit order at selling at 0006. Now, you might be thinking to yourself that, well, this seems basically the same thing as a limit order. It's going to sell you at the price that you want. It's going to buy you at the price that you want. Well, a stop loss is that, but the importance of the stop limit is that it's all about this activation price here. And the activation price sort of like a security net for you. That way, you know, the people know, hey, watch out, it's getting a little close here, so get ready to sell out if if it drops down anymore. With a limit order, like I said before, even though it's supposed to specifically sell you out at that price or buy you in at that price, sometime if the stock is fluctuating really quickly, selling out a lot or buying in a lot, then it can't exactly hit that same target that you want, but it's going to try its very best to. But I mean, it'll sometimes differ a triple pennies or even double pennies. So going in, stop limits, market orders, and limit orders. And I didn't keep the video above under 5 minutes. Next time, I'm going to try to. But that's basically the rundown. Now, if you guys have any questions before you're executing some orders, shoot me out a message, shoot me out a text, whatever you need. All right, happy trading, guys.